One thing we don't hear a lot about is the ultra wealthy only invest about 20 or 25% of their portfolio in equities. Another 20 or 25% is typically in real estate. You have another quarter of their typical investments in these private investments that are not necessarily correlated to the broader markets. Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larsen. Today, we're diving into chapter 4 of our new ebook, How to Become Financially Independent, How to Be Financially Free by 40. And this is not your average book. This isn't a book that's a hard copy that you read. This is an interactive ebook, and each chapter is going to have links to our free online course content, as well as resources to help you wherever you are in your journey to financial independence. Be sure to go to nextlevelincome.com/financial freedom book. That's all one word, financial freedom book. And it's linked in the show notes, nextlevelincome.com/financial freedom book to get your free copy as well as all the resources. And today we are going to talk about investing for cash flow, not just appreciation. So this is a radical shift, and this is not the accumulation theory, which says, you accumulate $3 million and live off 4% of your net worth until you pass away, and you have a 95% confidence interval. Our belief here at Next Level Income is that passive income that exceeds your expenses creates true freedom, so you can spend more time doing what you love, whether that's donating your time and money to causes, whether it's spending more time with your family, or whether it's growing your own business. And I realized this when I was studying for my MBA in finance and portfolio management, and I said, this system is broken. Like, if you want to work from 25 to 65, buy term insurance, invest in your 401k, and hope that your money doesn't run out, that's okay. Or do you want to optimize your income investments for freedom so that you are financially independent within the next 7 to 10 years and have the option of pursuing these passions? Last chapter, we talked about how to minimize your taxes versus minimizing your estate to avoid taxes. How can you optimize your taxes today and create generational wealth? And this chapter is going to show you how to achieve financial freedom faster. Our family did it when I was in my mid-30s, so you don't have to wait until you're 60 or 65 or whatever number your financial advisor tells you is safe, so you don't run out of money. And in my opinion, this is the difference between an abundance versus a scarcity mindset. Let's begin. We're going to start with your freedom math. Now, most investors, in my opinion, are chasing the wrong number. They focus on net worth, they focus on portfolio value, they look at market performance. None of these create true freedom. Cash flow creates true freedom. You're not going to become financially independent when your net worth is a certain number. You become financially free when your passive income exceeds your expenses. That's it. That's the whole equation. So let's break this down. Your net worth is your total assets minus your liabilities. And if you're invested in the stock market, this is going to be tied to stock market valuations. And today, as I'm recording this, the stock market is at all-time highs in terms of valuations. And from these levels, the market typically returns zero or negative returns from these levels. And it's not producing income. We want to create cash flow. We want to create money that's coming in consistently. We want it to be predictable and usable today that directly supports your lifestyle. And this is the problem. You can have a high net worth, but still feel financially trapped. Let's say you have a $2 million stock portfolio. You've got a business, you've got equity in real estate, but none of it is producing income. You still have to go to work every day. You still have to generate income to pay your expenses and live. And that's why I talked about traditional investing advice that focuses on accumulation, that focuses on appreciation and long-term growth, with the idea that if you build a large enough portfolio and draw it down later, you'll be able to retire. But this depends on market timing. You have sequence of returns risk, which I talk about in my first book. It delays freedom until you're qualified to take that money out of your plan without paying crazy fees and penalties. And it requires you to sell those assets to live. So you might be one downturn away from uncertainty. And I saw this with members of my family during the 2008, 2009 great financial crisis and crash. And that's why today we're going to talk about the shift from investing for income first versus what will this be worth someday. We're going to start asking, will this pay me? What will this pay me? Robert Kiyosaki talks about how an asset is producing income every month, whereas a liability is taking your income every month. That's why I talk about how your home is not an asset, it's a liability. Your home takes money from you every month. It's not producing money every month. So, what is the goal? The goal is to replace your lifestyle, replace your expenses with passive income. So, if you spend $100,000 a year, that's your goal. $100,000 in passive income, not $3 million in assets, not a certain stock price, income. And where does this come from? So let's dive into three categories that we like to produce this income. Number one, as you can imagine, is real estate. That is how we created financial independence for our family. It's one of the most powerful vehicles for cash flow. And why is that? You have rental income that comes from it. You have depreciation, which provides tax advantages. You have leverage. You don't have to pay cash for it. And you should have appreciation over long periods of time. Maybe there's fluctuations in the short term, but appreciation over time, either forced in a commercial property where you're able to force the value up, or if you have residential property over time, that value is going to go up probably with inflation, 3, 4, 5% a year. And if it's leveraged, you're going to be able to take advantage of that appreciation as you pay the mortgage down over time. You can also invest in multifamily, self-storage, mobile home parks. You can invest in short-term rentals and other commercial and industrial properties. And again, real estate is my favorite because it provides income plus tax efficiency plus scalability. As you own one property and it's cash flow positive, you can then invest in another property and you can build your portfolio over time to reliably increase your passive income. The second way that the ultra wealthy get rich is businesses. Owning or investing in a business can produce profit. You can take that out in distributions. It can be upside equity. It can be recurring revenue. I think owning your own business is a phenomenal way to accelerate your path to financial independence, but you can also invest in businesses. You can not only invest in like your own operating business, but also franchise models or private equity investments. And these businesses can scale faster than most asset classes. But there's a lot of other variability that comes with that. So as you look at this type of investment, you have to educate yourself. We've had a lot of podcasts with business owners, with franchise consultants on our podcast, like Kim Daly, Daly, and those professionals can help you look at businesses that would be a good fit, not only as an investment, but also for your specific situation. Aside from investing directly in your own real estate and businesses, there's a lot of private investment options. That's how Next Level Income was founded, to give the average person access to these investments that traditionally had only been available to the ultra wealthy. These include syndications, private funds. We've got a couple different debt funds right now that produce reliable monthly or quarterly income. And they offer the ability to be a passive investor, be professionally managed, and diversify your portfolio like the ultra wealthy. One thing we don't hear a lot about is the ultra wealthy only invest about 20 or 25% of their portfolio in equities. Another 20 or 25% is typically in real estate. You have another quarter of their typical investments in these private investments that are not necessarily correlated to the broader markets. And that can give you not only higher returns, but it can also give you lower variability in your portfolio. Now, you also have to consider, do you want to be an operator or do you want to be a passive investor? As an operator, you're going to actively manage the asset or business. It's going to give you more control and you should get higher returns, but it's going to take your time and expertise and your effort. So one of the things that I love is if you're married, one spouse can have an active business or high income W-2 job. The other spouse can run one of the family businesses. And this can provide an optimal blend of, of income security, of benefits with the tax advantages of a business. And when you start to blend in real estate on top of that, you can have a really tax efficient way of not only earning income, but also optimizing your taxes over time. Now, as a passive investor, so if you say, hey, Chris, we're good, we don't have any more time to start a business or own or operate our own real estate, you can be a passive investor. You can check out our offerings. You can reach out to us at nextlevelincome.com to schedule a call. But this means you invest your capital with an operator, you have a lower time commitment, you allow that operating team to operate those, and that's going to be more scalable, especially for high income professionals. You know, if you're a physician, if you are an attorney, if you are an executive or sales individual that's out there making a lot of money and you don't want to give that up, you can have your cake and eat it too by investing passively with the right operators. And that's super important. So in this chapter, if you get the book at nextlevelincome.com/financial freedom book, you can get access to our LP syndication course. And we are going to walk you through each step of how to evaluate the operator, evaluate the business plan, understand the risks that are involved, and really understand the questions to ask these operators as you go into these investments. I found that that's one of the biggest challenges when I talk to investors is they say, Chris, I don't know what to ask. Like, what should I be asking? So we put together a little mini course for you so you can actually go through and understand and have a playbook to ask about these, ask the right questions with these operators. And as you go through this, I want you to understand you have to look at the risk adjusted returns. You know, do you want a 20% return with high risk, or do you want 10 or 12% return with strong downside protection and tax advantages? You have to ask yourself what your goals are for your portfolio and your returns. You know, I talked about in chapter 2, if you have an investment with a 15% IRR and an 8% pure income investment, you know, these aren't guarantees. You know, these are the targets based on, you know, real estate, private investments, and operators that are out there. And you have to ask, you know, what is your goal right now? If you're in your 30s and you are trying to build your wealth, you may have a lower priority with income. You may want more appreciation and more tax advantages so you can allow your wealth to grow over time. Whereas if you're like my stepfather who's in his 70s, he needs a specific amount each month to pay his expenses. He's going to be more focused on income. It'd be great to have depreciation in that circumstance as well. But you know, these are the things that you have to ask yourself as you build your investor framework. And as part of that framework, I want you to ask yourself some questions. 1, does the opportunity provide cash flow? 2, who is the operator? What is their track record? 3, what is the downside risk? And 4, how does it fit into your portfolio? Are you diversified? You know, do you have all your eggs in one basket in equities? Do you have all your eggs in a real estate basket or in your business? And you know, we've shared a ton of real world examples over the last 7 years on the podcast of how investors generate income. And we talk about different assets over time, and you can go back and listen to those and explore the different options that are out there. And this is chapter 4. So let's review and talk about the flywheel that you've been building if you've been working through this. Number 1, high income from a career or a business. Number 2, build a high savings rate. Get used to living below your means and putting your capital to work. We just wrapped up chapter 3 where we talked about tax efficiencies and tax strategy and entity structures to optimize what you keep, not just what you make. And number 4, which is the fun part, is cash flowing investments. And if you do all these, you're going to increase your passive income. And once your passive income grows, you reduce your reliance on the earned income, which means you can reinvest that earned income to a point where you're comfortable, where you say, hey, this is not what I want to be doing anymore. Maybe you shift the way you're spending your time. And that shift comes with an emotional shift as well, because you're not as worried about the stock market price. You're not as worried about when you can retire, and you have more freedom over time. And you can say, okay, what is this producing? Not just in income, but in terms of your lifestyle. So net worth is really just a scoreboard. Cash flow is freedom. Cash flow is freedom. So I encourage you to focus on cash flow because that's the number that's really going to get you to financial freedom the fastest. So I'm going to walk you through here next steps. Review your current investments. Are they producing income? Define your passive income target. Explore opportunities in real estate and private investments that can increase your cash flow. Go to our course, study deal structures and how to interview operators to find the right partnerships for you. And don't forget, use chrislarsen.ai as your 24/7 coach to help answer these questions. Now, we're not investment advisors, we're not attorneys or tax professionals, but use this to help bounce some ideas so you can know the questions to ask your advisors that are out there. So again, remember to go to nextlevelincome.com/financial freedom book. You'll reserve a free copy of your book. You'll get access to all the tools that are in this book, including access to our free LP syndicator course. And stay in touch. Reach out to us at nextlevelincome.com. Be a part of the community. And if you find value in this, please share this with your friends and family that you may think will have value in it as well.